Hello, viewers. My name is Sunday. Welcome to Against FX. Yeah, guys, how are you guys doing right now? Man, the program has been on, and today is day 23 of this free 1 month free course for beginners. All right. And if you are coming across this video for the first time, please do well to subscribe. And the good news is that there is a free course, 1 month free course. It's a crash course for those who are aspiring to become a forex trader. Forex trading is a skill set. You need to learn the basics first before you can become profitable. After you have learned, you need to practice. Then, what you have practiced, you now go live and start making that money you wish for. All right, but it takes a little process, patience, and you need to know what you are doing. All right, so this is a free course. Nobody is charging you for anything. It's 1 month full course. All right. So do well to subscribe to my channel and go to the playlist. After you have subscribed, activate the bell sign, go to the playlist. You will see beginners free course. That is where you have all the videos that you need um, to really equip yourself right from the scratch up to the level where you will now stand on your own and be trading. And if you have watched any video of any topic and you are having any issue, challenges, please drop it at the comment section. Let me know if it warrant me to make another video to further buttress those points I was making. I will gladly do that. That being said, today we are going to be treating the topic I titled The Secret Behind Different Time Frame. All right? The secret behind different time frame. Sometimes this time frame of a thing do confuse uh, traders, most especially beginners, because if you open 5 minute time frame, yes, you see a lot of information there. If you open 1 hour, 10 minutes, 30 minutes, 4 hours, daily, 1 month, you see a lot of information. And all these things happen simultaneously, meaning at the same time. So which time frame should you now concentrate on based on your trading style and your um, that resonate with your lifestyle? All right, it's very, very important. All right, so today I'm going to uh, make you guys understand the secret behind time frame. All right, so that from today you will not, after this video, you will not be confused and you will know how to deal with them systematically. All right, so it's very, very important that you stay tuned, watch this video to the end, and I bet you will get value for it. And after you have, please do drop a comment, like, share to others that really needs it, okay? That being said, let's go straight uh, to our slide for today. What are time frames in trading? A time frame refers to the duration of each candlestick or bar on a chart. All right. We have candlestick, we have bar too. So when we talk about bar, is another form of a chart that does not display a candlestick, but it will display a bar chart. All right. So, okay, maybe I should just show you guys quickly so that you understand. But the ones that people really use, most people use that is common is candlestick. So you just come here, you see candle, right? But when you click on it, this drop down, bar style. When you drop it down, you see different types of uh, uh, chart type. All right. So the one that I'm using is candlestick. All right. The one that I'm using is candlestick. Do you understand? So if you want to use line, you can click on it. If you click on it, you see the chart will now turn to line like this. If you come here, if you click on another one, you will see different types. All right? You see different types. If you click on Reno, you see it will turn to Reno. This is it. It will turn to Reno. All right, if you click on another one, line break, it's like that. You have different types. But I tell you, the one that the one that is common is what? The candlestick. That is what most people or every trader is using. I think is even fine by uh, most traders. So a time frame refers to the duration of each candlesticks or bar on a chart. For example, 1 hour chart simply means each candle shows you 1 hour of price action. All right. 1 hour chart, it shows you each candle shows you 1 hour of price action. Then the daily chart, each candle shows you one full day price action. All right. But here is the twist. Markets operate on multiple time frames simultaneously based on what I've just said, and each tells a different part of the story. That is the reason you need to get yourself acquainted with time frame. All right, let's go on. Why is this thing hanging? Okay, let's go on. Then why use multiple time frame? Now, using just one time frame is like looking at a map with only street level view. You miss the bigger picture. All right. Here is what multiple time frame analysis will unlock for you. Stay tuned. Now, number one, trend confirmation. When you use multiple time frame, it will give you trend confirmation. What do I mean by that? When you use a higher time frame, for example, a daily, weekly, or monthly, to spot the overall trend. This time frame, daily, weekly, or monthly time frame, will help you spot the overall trend. It will tell you the direction of the trend, the long time trend, not the short time. All right, that is why you see when you are trading on a lower time frame, that is a short term. There's nothing wrong with it, but something will be wrong with it if you don't align or position with what the higher time frame is saying. All right, because on a lower time frame, all right, there is much noise. All right, there is much noise. All right, so but if you start your analysis from the higher time frame and you now scale down to the lower time frame, you now align with the higher time frame. All right, when you align with the higher time frame, that is when you will now be profitable. All right, that is when you will now be profitable because lower time frame must move to align with the higher time frame before a bigger push. All right, and one thing you must know is that a pullback is when it's pulling back, if the higher time frame is pulling back, on the lower time frame is like a bullish trend. You will not say, oh, it's bullish, you jump in. And by the time the higher time frame finishes the pullback or a retracement, now it wants to now start the push phase. Like I told you guys, we have the push phase and we have the retracement phase in trading. All right. So on the higher time frame, if it's making a pullback phase on a lower time frame, it will be bullish. All right, so that is why you need to have idea, you need to have knowledge about this different time frame for you to now know what you want to do. All right, you know that when the higher time frame is making a retracement, that is a pullback phase, if you scale down, all right, you now understand, okay, the reason why it's bullish is because the higher time frame is making a pullback phase. All right. And you should understand that it will not last because by the time it ends, or rather, it finishes the pullback phase and it wants to now start the push phase, there will be a lot of volume and momentum. So if you still remain thinking that it's bullish at that point, all right, it becomes problem. Then you now see by the time the higher time frame is about to start being bullish, the lower time frame would have finished that push phase. It will now start becoming bullish and bearish. Then you now say, okay, I'll take my profit. Then it's now bearish. I will not enter because it's bearish. You think the trend is now bearish, not knowing that the real bullish push is about to happen. By the time the lower time frame starts bearish, all right, as it's pulling back, once you align with the higher time frame time, then the pre-bullish push will now start. You will now place a trade thinking it's bearish. As you put your trade, as you now place your trade to become bearish, yes, you catch some pips, but when the real push will now start, it will take you out. You will not be thinking, oh, what is going on? It will go up and it will come down. Why not align yourself with the higher time frame? Align yourself with the higher time frame. In anything you want to do, look at the higher time frame. That is the Google map that is giving you the direction of the trend. Anything you are seeing on the lower time frame, don't pay attention. Align yourself to the higher time frame. That is the only way you can be profitable. And the only problem we have with new traders and even some traders is that they don't have the patience to wait on a higher time frame for a setup to form. That is just it, impatient. And if you are still bringing that excitement into trading, you'll be making mistakes, all right? You just, trading is something that is it's not exciting. It's a dull moment. It's when you are trading, there's no excitement there because it's a kind of dull. It makes it boring. All right, let me just use that word. It's boring because you have to wait for your setup. Once your setup is formed, you place your trade. You are not doing anything again. So for you to be profitable, you need to default yourself into that boring moment. All right, that is the game. That excitement on the lower time frame, oh, it's bullish, it's bearish. No, you will just be shooting yourself in the leg. You make some profit and you give it back to the market, which is not really advisable. As a beginner, please focus on higher time frame. Focus on higher time frame so that you get used to it right from the beginning, not lower time frame. Some people still trade on 1 minute, 2 minutes, 3 minutes, 5 minutes, like that. All right, so please don't do that. Please don't do that. If you want to really make good money in this market, please don't run away from lower time frame. Thank you. Use a lower time frame, e.g., like 1 hour, 15 minutes to find precise entry and exit point. So you use a higher time frame, e.g., daily, weekly, or monthly, to spot the overall trend. Now that you have known, you have been able to identify the overall trend, you can now scale down to a lower time frame for your precise entry and exit point based on what the higher time frame, based on the direction of the higher time frame. All right. Now you go, you mark your horizontal line, mark your support and resistance level. All right. Once you have done all that on the higher time frame, you scale down. Once you now scale down to your time of execution, all right, you already seen, okay, this is where you should enter, this is where you should exit. You already know the support level, you already know the resistance level. If the trend is bullish, then you know that, okay, at the resistance level, I'm supposed to exit. All right, but that's where I'll put the next resistance level, that's where I'll put my take profit. All right, that is how you trade. Then when you do all that, it helps you to avoid trading against the dominant trend. That is what I just told you guys. You know that the higher time frame says we are bullish. Then, because you did not check the higher time frame, because you did not do your top-down analysis to check the higher time frame to know the direction of trend, the dormant trend, the long-term trend, what you will now do is that you are on the lower time frame trading against the higher time frame. Do you think it will work? Can a small car be going against a trailer? It will crush you. So that is it. You don't once the higher time frame is set to move, any other support or resistance level that is in front, any obstacle in front, it clears it because he already has point A. He has another point B where it will stop before pullback. And he's going to get there. Notice stops it. He's going to get there before he pulls back. Let me tell you one story. Let me tell you one secret. It's more expensive to manipulate trade on a higher time frame than a lower time frame. Lower time frame is easily manipulated, but higher time frame is more expensive. All right. So that is why what they do is to manipulate, do their manipulation on the lower time frame. The higher time frame, they can't do that because it's expensive to do that. All right. This will help you to avoid trading against the dormant trend. Don't trade against the higher time frame. If you do, you are going to lose your capital. Then the second one is noise filtering. All right. Lower time frames are full of noise. I've told you, random price movement. You just see up and down, sideways like that. Lower time frame, that is where you find all those noise and random price movement. On the higher time frame, there is direction, clear direction, point A to point B, point C to point D. That is just it. Once you get to if we move from point A and get to point B, it stops there, it will retrace. After the retracement is completed, it will now move to point C. It's like that, as simple. And you will see it very clear. And everybody, the whole world is watching it. The whole trader in the whole world, they are watching it. As it's coming to a resistance level, they know sellers will now start locking in their orders. Or as it's retracing back to a support level, buyers will now start loading their orders. Then with that, price will rise. It's like that. The higher time frame gives more reliable signals and reduce false entry. The third one is better risk management. All right, you can see why use multiple time frame. Number one, trend confirmation. Number two, better risk management. No, number two, noise filter. It helps you to filter noise. It helps you to know the trend confirmation, where the trend is headed. Then the number three, it is also helps to better risk management, aligning Aligning trade with the higher time frame trend reduces the chance of being white-sold by short-term volatility. All right? There are volatility, all right, in the market. There is volatility in the market. But if you align yourself with the higher time frame, you just save yourself from all those short-term volatility. All right? Then how to use time frame strategically. All right? How to use time frame strategically. Here is a simple top-down approach. We have your trading style, maybe swing trading, short-term swing trading, intraday trading, fast-paced day trading. All right? Now, if you talk of swing trading, now that means your higher time frame will be weekly. All right? When you are a swing trader, your higher time frame should be weekly. Look at the weekly, even monthly. First, look at the monthly plus the weekly. All right? Then your lower time frame will be daily or 4 hour. When you see 4H, you know it's 4 hour. All right? After you have checked the monthly time frame, the weekly time frame, you scale down to daily or 4 hours for your entry. That means you are swing trading. What swing trading simply means is that when you place your trade, you don't close your trade just in a day. You leave your trade more than 1 day, 2 days, sometimes 3 days, 1 week, as the case may be, because you have already done your top-down analysis. You know the direction of the long-term trend, the dormant trend. You know where it's going. So once you place your order, all right, once you place your order, any other volatility, short-term volatility, you don't blow the cake because you know that yes, price will go up, it will come down. It's normal. It will go up, it will come down. But it has a direction, it has a target, it has taken off from point A, it will get to point B. Just like I told you guys, there's what we call uh, buy side liquidity and sell side liquidity. All right. At the support level, we have the sell side liquidity. At the resistance level, we have the buy side liquidity when you are bullish. All right. Now, if price now pull back to support level and it did not take the sell side liquidity and it now reverse, the target will always be the buy side liquidity. All right. Then when you are bearish, when you are in a bearish trend, price will pull back to a resistance level. It will not take the buy side liquidity. When it now reverse, the next target will be the sell side liquidity because it needs to break structure to the downside, not the upside. Anytime you see that it breaks structure to the upside and of which is a bearish trade, just know that there is change of trend, change of character there, or market shift. Or if it's bullish, anytime you see that instead of price to take the buy side liquidity, it now takes the sell side liquidity, you should know that the trend is about to change. That is what we call market shift. I've explained this thing time without number. I do know why I take my time to be explaining this. I want it to sink. I want you guys to really understand because market structure, top-down analysis, knowing candlestick anatomy, and knowing the type, and knowing the important candlesticks in the forex market. I tell you, with risk management, you are okay. Those are the things you need to really sink yourself into learning. And funny enough, I have already provided you with everything. How to read market structure. When there's break of structure, I've already told you guys. When there's a market shift or change of character, I've already taught you guys. The risk management, I've already taught you guys. How to even, without using forex calculator, all right? You can do it. I've already given you guys everything. You can just carry your phone, do your calculator, your own manually, and just know the type of lot size you should use based on from your entry to your stop loss pips. You just know. You know what you are risking. All right? You know, okay, if it's 50 pips, okay, at this 50 pips, you just do the calculation based on what I've just taught you guys. You know, okay, now I have to reduce my lot size. As simple as that. Guys, you're not paying me for this. I am giving it to you from my heart. Watch all those videos and see if you will not be profitable. Watch them. It's not just by watching movie. Watch them, get a pen and a paper, take notes. Rewatch the video again and again until you fully understand it. And I'm here. Even after this 1 month course, just on the comment section, write to me, drop a comment there and tell me, okay, this topic is really confusing. I want you to throw more light. I will make another video, all right, to clarify some issues that you are having, some challenges you are having, the type of challenges you are having. I will clarify it. And if after everything, that's okay, guy, please, I want you to be my mentor, be teaching me. I want you to take me to another level in this trading. I will gladly do that. You know our website, againstfx.com. Go there. All right? Or you email me, againstfx@gmail.com. As simple as that. You'll be in your house and you acquire a good skill that will pay you for the rest of your life. Be you man or woman, boy or girl, even if you are retired, this is something you can do. I tell you. So short-term swing trading, all right? Short-term swing trading, that is daily. You use daily as your higher time frame. If you are using short-term swing trading, you are a swing trader, but short-term, you use daily as your higher time frame. Then 4 hours or 1 hour for your lower time frame. That is, it will now be for anyone from these for your execution where you place your trade. The higher time frame will be daily. Then your 4 hours, you use your 4 hours to get more details about what you have seen on a daily. Then you now use your 1 hour to execute your trade. Intraday trading now, what do we mean by intraday trading? Intraday trading simply means you open a position in the morning or in the afternoon, any time, then you make sure that same day you close out your position. So you are a day trader. That means you go to daily, that will be your higher time frame, then 30 minutes or 50 minutes or whatever, you can even use even 1 hour, as the case may be, for your entry, uh, for your time frame of execution, for your entry and exit. All right. Fast paced day trading. All right. That one is you just enter, after a while, you get out. All right. It's It's more of a scalper, all right? It's more of a scalper. You're scalping, then maybe 1 hour, use 1 hour as your higher time frame, all right, to know the trend, all right? Then 5 minutes or 1 minute for your time of execution, guy. But all these things, I don't want you to do it. I'm just showing you that all these things are possible, but the key there is that you need to align yourself with the higher time frame, knowing that the higher time frame is the Google map. It tells you where the trend, the long-term trend is focused on. But in between, you will still see bullish, bearish, price will be fluctuating here and there. All right. You catch some pips, you make money, but you will still give it back to the market. That is a problem. If you refuse to align yourself with the higher time frame, there's one thing you need to note. Start with the higher time frame. With that, you'll be able to define the market direction. Then this next one is, then you drop to the lower time frame to time your entries and exit. Guys, if there's anybody that will take time to explain this thing more than me, that means that person too is good. Kudos. But there is no way anybody can explain this thing better. The way I'm calm. I know I'm not charging you for anything, and I'm giving you for free. This is how you trade. Your higher time frame will tell you the direction of the trend. All right? Flee from the lower time frame. Even if you want to trade from the lower time frame, mark your structures from the higher time frames. Come to the lower time frame and trade in the direction of the higher time frame. When you do that, you will be profitable. When you do that, you will not even be scared with short-term market volatility. You will not even be scared. You know that when a market is pushing, is bullish, it cannot be bullish forever. It will get to a point, sometimes it will retrace before it continue again. And we also have minor retracement, and we have the real pullback, deep retracement. We have deep retracement, we have minor retracement. I'm still going to teach you guys on that. We still have some days, all right? Today is 23rd, right? We still have some days before this month will end. I'm still going to teach you guys that. All right. Common mistakes to avoid as a trader. Number one, bottom-up analysis. That means starting with lower time frame can lead to biased decision, because when you see lower time frame, if you open higher time frame, you now scale down to lower time frame, you now discover that it's a different chart entirely. But everything happens simultaneously. As the lower time frame is printing, the higher time frame also is printing. All right? You might open the higher time, you see it's facing down. You open the lower time frame, you now see it's like it's bullish. Then you now say, okay, the lower time frame, if you now stick to the lower time frame, you will be thrown out when the higher time frame start to push, because that is what will give you the direction. So when you are starting your analysis from bottom up, is a wrong approach. you take a, it will lead to biased decision. All right. Ignoring the bigger picture, that is the higher time frame, trading against the higher time frame trend of often leads to losses. I've told you that if you are trading against a higher time frame, you are in trouble. I don't need to um, say too much. I don't need to um, waste you guys' time. This information that I've just shared to you now, this knowledge that I've shared to you now, is worth millions. I'm telling you, it's worth millions. All right. So grab this thing, study it, and practice it, and see if it will not be profitable as a trader. Thank you so much. Thank you so much. And God will richly bless you. And before I close, we have a support level and we have a resistance level. When price get to a resistance level, what will happen? Sellers will now start offloading their orders, challenging the high price so that they can push the price down. And as the price is coming down, when it gets to a support level, the support level is where buyers will stay and wait for price. Once the price get to that level, buyers will now start offloading, putting in their orders, locking in their orders. As they are doing that, they will now drive the price up. That is what happens in the forex market every day, 24/7 day, 5 days in a week, like that, like that. It's a cycle. If you know all these things, you see how calm this trend is. This is daily trend. It's very calm. You know the direction. All right? You know where it's going. If you scale down to 5 minutes, 15 minutes now, for example, look, see all this jaga jaga, you see them, you see. But if you don't know that the higher time frame is pointing to the top, is going up, you will now be scared whether this one is coming down. If you come to 5 minutes, you see all this movement. They are unnecessary. All this thing. We will now come here and be trading. You know, see, look at how this one is pushing boo, boo. It's going up, coming down. Is that what you should be trading? No. Like this one here now, all these things are just rubbish. They are rubbish. You see somebody will enter from here now, bush. It will stay. Before you know the price action will come back, push the person out. You see, he has changed, this one has changed to this. You don't trade like that. You don't trade like that. If you have done your analysis, stay, all right, go to the higher time frame, trade there, trade there. It might take time for your what do you call your setup to form. But once your setup forms, I guarantee you already know the direction. You know where it's going to. So you don't need to be scared, even if you see a pullback. You don't need to be scared until it gets to that level of price. You know, okay, at this point, there will be a deep pullback. And if you even want to now even scalp to catch up some pips, you enter. You now scale down, you enter to catch some pips. That's all. But you must follow the higher time frame. That is the message. As a beginner, please don't trade on the lower time frame. Even you open your chart on Monday, you have done your analysis, no setup, don't worry. Get a book. Get a book and be reading, right? Get a book and be reading. While you wait for your setup, get good books that will help your life. All right? Get good books that will help your life. All right? Get good books that will help your life so that even as you keep trading, you'll be acquiring more knowledge. All right. So that being said, I thank you so much. And I hope you've gotten value from this. Please do well to share this video. And as you do, comment also, activate the bell sign. Anytime a video is released, you'll be the first to be notified. As you do, God will richly bless you. Leave a comment, it's very important, and share these videos. Thank you.